the World Bank has projected that Nigeria's economy will experience a slow growth next year, that's 2023. The global financial institution, in a report tagged Africa's Pulse, disclosed that the growth rate for the country will be down from 3.3% to 3.2%, blaming it on rising inflationary pressures. The report also shows that South African economy will weaken further to 1.4% in 2023 from its current 1.9% due to structural constraint, but will rebound to 1.8% in 2024. While the recovery from the pandemic shock is incomplete, higher inflation, which reduces consumers' disposable income, lingering effects of aggressive monetary policies, the deteriorated labor market, and weak confidence will weigh in on growth in private consumption in both countries, according to the World Bank. While Nigeria's external reserves have fallen by $2.2 billion to $3.31 billion in September 29, 2022, as against the $40.5 billion recorded as of December 31, 2021. According to the latest reports from the Central Bank of Nigeria, this is a 5.42% decrease in foreign reserves in 1 year after the reserves plunged by $706 million last month. Despite rising oil prices this year, Nigeria's foreign exchange reserves have been depleted by billions of dollars. The report also shows that the Nigerian economy is suffering from a lack of foreign exchange as currency traders continue to complain about limited foreign liquidity, forcing the local currency to decline more in the FX market, despite the central bank's intervention in the forex market. Nonetheless, the exchange rate at the official window has been relatively stable, but mostly inaccessible to most Nigerians. While the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Mr. Mele Kyari, has announced that the NNPC as a corporation grew its profit after tax and assets from 287 billion naira and 15.86 trillion naira in 2020 to 674 billion naira and 16.3 trillion naira in 2021, respectively. Addressing newsmen at a press conference in the nation's capital, Abuja, the NNPCL boss maintains that the 2021 profit was contained in the group audited financial statement of the oil firm for the year ended December 31, 2021. He noted that all major trunk lines conveying crude oil to export terminals are currently shut down in order to avert further oil theft in the Niger Delta. Mr. Kyari, however, reaffirmed that efforts by the oil firm, security agencies, and surveillance contractors are paying off, as about 400,000 barrels of crude will be added to the country's output in the next few days to boost the country's crude oil production quota. And away from the oil and gas, the International Association of Deposit Insurance Africa Regional Committee workshop has opened in the nation's capital, Abuja, with participation from across the continent. But the 4-day conference seeks to find ways of boosting a more resilient financial system in line with global economic realities. A correspondent, Lara Afulayo, tells us more.
The International Association of Deposit Insurers Africa Regional Committee workshop with the theme Normality in Turbulent Periods, the Stability Role of Deposit Insurance. This is against the backdrop of current and emerging trends in the global financial system terrain, with emphasis on Africa.
Crisis simulations are also very important. They become extremely important to many deposit insurers as well, as a way of preparing for the unexpected. And these are all areas that we in IADI are working very much with our IADI members and our partners in developing training and capacity building programs and helping to contribute to ones such as this workshop.
The platform is a means of discussing important issues, sharing ideas and experiences towards a deeper understanding of needed actions for a more resilient financial system necessary for sustainable economic growth across participating countries.
That we need to keep working through forums like the IADI and other collaborating agencies to share experiences, strengthen our supervisory tools, monitor the effectiveness of insured institutions' contingency planning and crisis management framework, as well as ensure our readiness for timely and prompt intervention to promote financial system stability.
Growing financial interconnectedness has shown that banking crises can have a contagion effect. A system-wide approach to crisis management involving collaborative efforts with the financial safety net participants and regional deposit insurance system is therefore highly imperative.
The emphasis here is on the growth seen in crisis detection methods by deposit insurers in areas including contingency planning and crisis management, as well as designing and implementing systemic means of strengthening operational resilience.
The NDIC, which was established in 1989 with the mandate of being a risk minimizer, has since inception, and most especially during critical times, been able to allay the fears of depositors through its wide array of public enlightenment and education programs, through its collaboration with the central bank, and the efficient supervision of the insured institutions to promote sound risk management, which reduces the likelihood of failure and effective resolution of failing banks.
It will provide a platform for brilliant ideas and experience sharing, especially of the four-dimensional shocks earlier highlighted that are currently shaping the current global economies and that of Nigeria, with obvious linkages to the safety and soundness of the banking system and role of deposit insurance.
The International Association of Deposit Insurers began operations in 2002 with 25 members, which has since grown to 92. It has the mission of contributing to the effectiveness of deposit insurance through promotional guidance and international cooperation. Its success stories include boosting financial system stability and strengthening financial safety net mechanisms, amongst others. Lara Folayo, TVC News, Abuja.
Let's shift our focus now to global markets as Asian stocks rose today as investors are hopeful future global interest rate rises might become less aggressive amid early signs previous policy tightening was working to temper price pressures in some major world economies. MSCI's Brothers Index of Asia-Pacific shares outside Japan was up at 0.5% after U.S. stocks ended the previous session with gains. Australian shares were up at 1.35% in early trade, while Japan's Nikkei climbed at 0.34%. Hong Kong's Hang Seng Index gained 3.76% a day after its public holiday, while mainland Chinese markets remain closed for holidays. The Dow Jones Industrial Average rose 2.8%, while the S&P 500 gained 3.06%, and the Nasdaq Composite added 3.34%. Away from global markets, billionaire Elon Marx is proposing to proceed along with his unique $44 billion bid to take Twitter Incorporated non-public, calling for a finish to a lawsuit by the social media firm that might have compelled him to pay up whether or not he needed to. According to reports, a settlement would be put in place by the world's richest particular person in command of probably the most influential media platforms and finish months of litigation that broke Twitter's model and fed Mr. Marx fame for erratic behavior. Mr. Marx, the chief executive officer of automobile maker Tesla Incorporated, will take over an organization initially dedicated to purchasing in April, however, quickly soared on. The renewed supply comes forward of an extremely anticipated face-off between Mr. Marx and Twitter in Delaware's courtroom of Chancery on October 17, 2021, during which the social media firm was set to hunt an order directing Mr. Marx to shut the deal for £44 million. While the drop in Eurozone business activity deepened last month, probably extinguishing any hope the currency union will avoid a recession, just as elevated inflation puts pressure on the European Central Bank to act. The businesses and consumers are very wary of spending as the region heads into the winter months, with already high energy prices likely to climb further, while firms are also suffering from supply chains disrupted by Russia's invasion of Ukraine. And while S&P Global's final composite purchasing managers index for the Eurozone, seen as a good gauge of economic health, fell to a 20-month low of 48.1 in September from August 48.9. The final Eurozone PMIs for September suggested that price pressures in the region are not yet starting to ease, even as activity appears to be in decline. And finally, oil prices on the international markets inched lower today after gains in recent days as OPEC Plus producers looked set to agree deep output target cuts later in the day despite a tight market. U.S. West Texas Intermediate crude experienced a downward price review of 0.35%, selling at $86.22 per barrel. The Brent crude future sell for $91.54 per barrel, with a price decline of 0.28%. And Bonnie Light experienced an optic review of 3.98% to sell at $93.36 per barrel. And for the OPEC basket, crude oil dealers offer $90.68 per barrel with a price decline of 1.80%.